It began with a single sale, then a flood. Private jets touched down in Wyoming, Silicon Valley mansions went dark, and billionaires from California to Connecticut quietly cashed out of their holdings. In just 6 weeks, America's wealthiest individuals had liquidated over $50 billion in stocks, tech shares, and private equity. It didn't happen on CNBC. It happened behind closed doors, filed in obscure SEC Form 4s, buried in financial statements no one read. Then one morning, Bloomberg broke the headline that changed everything. U.S. billionaires execute historic asset liquidation, $50 billion in sales since January. The timing was uncanny. Markets were at record highs. The economy looked unstoppable. AI stocks were booming. So why were America's richest people running for the exits? A single quote from a leaked Goldman Sachs memo summed it up best. They're not betting on the next boom. They're bracing for the next collapse. And for the first time in years, Wall Street's elite were moving, not to make money, but to survive what's coming next. The stakes couldn't be higher. On the surface, everything looked perfect. Unemployment was at historic lows. The Dow flirted with 45,000, and the Fed had just hinted at cutting interest rates. But under that glossy surface, cracks were spreading. The national debt had just crossed $38 trillion. Corporate debt hit record highs. Bond yields flipped, again, signaling a recession ahead. Small business defaults surged quietly by 40%. Mortgage delinquencies doubled. Credit card interest hit 23%, the highest since 1991. Yet none of that made the evening news. It wasn't the poor or middle class panicking this time. It was the people who never panic. The billionaires who always see the storm before it hits. And the $50 billion they just pulled out wasn't random. It was a message. Something was about to break, again. The early signs appeared months earlier, but everyone ignored them. In late 2024, Jeff Bezos sold $4 billion in Amazon stock. Elon Musk offloaded another $7 billion in Tesla shares. Warren Buffett's Berkshire Hathaway dumped a record amount of bank stocks. Commentators brushed it off as tax strategy or portfolio rebalancing. But beneath the surface, a strange pattern emerged. Private jet traffic to the Cayman Islands, Zurich, and Singapore surged 60%. Luxury home sales in Aspen and Miami hit record highs, paid for in cash, not loans. And family offices, the quiet financial fortresses of the ultra-wealthy, started buying farmland, gold, and short-term treasury bills. Then came the invisible threat, a sudden spike in reverse repo operations, where banks park excess cash at the Fed. In plain English, it meant big money was retreating to safety. The last time that happened at this scale? Early 2008. In a dim conference room on the 40th floor of a Manhattan tower, senior analysts at Goldman Sachs stared at a heat map of U.S. liquidity. Red zones pulsed across commercial real estate, consumer credit, and tech. Everything looks fine, until it doesn't, one executive muttered. The data showed capital flight, massive amounts of private wealth leaving equities for hard assets. The models couldn't explain it, but the traders could feel it. The rhythm of the market had changed. Meanwhile, in Arizona, Liam Patterson, a 42-year-old contractor, watched his mortgage refinance application collapse after his bank updated lending standards. In Chicago, Rachel Gomez, a teacher, saw her grocery bill jump 25% in 6 months. Both of them were struggling, while billionaires quietly escaped the system entirely. Two Americas, one trying to survive, the other preparing for impact. Then came the illusion of safety. In early 2026, the S&P 500 hit an all-time high. Tech IPOs exploded. AI companies tripled overnight. Media outlets declared a new economic renaissance. Even the Federal Reserve joined the celebration, cutting rates for the first time in 3 years. But hidden in those same Fed minutes was a sentence most reporters ignored. Inflation expectations remained persistently above target in structural sectors. Translation, prices weren't falling, they were stuck. Then came the countdown. Credit default swaps, the insurance against corporate debt, started rising quietly. By March, they'd hit the same levels as November 2007. And in a private Bloomberg terminal chat leaked days later, a hedge fund trader wrote, "We've got 90 days. Then the cracks become visible." The countdown to the next correction had already started. No one knew the date. But billionaires were acting like they did. Behind every boom and bust, there's a villain. But this time, the villain wasn't a person, it was the system itself. Decades of easy money, low interest rates, and trillion-dollar bailouts had inflated everything. Tech valuations, housing prices, and even government confidence. It wasn't just greed anymore. It was addiction. Inside the Federal Reserve, policymakers debated what no one dared say publicly. America's debt was now mathematically unpayable. The choice was grim: inflate it away with printing, or crash the system trying to fix it. One insider leaked a memo summarizing the dilemma in 5 chilling words. We've borrowed the future already. And the billionaires? They'd simply decided to cash out before the reckoning. The first twist came in April 2026. A whistleblower from the Office of the Comptroller of the Currency leaked a document labeled Corporate Debt Vulnerability Index. It showed that 42% of U.S. corporate debt was held by just 20 private equity firms, the same ones quietly dumping assets. Even worse, those firms had used borrowed money to buy everything from hospitals to housing developments. It wasn't just billionaires selling. They were unwinding the economy itself. And as their holdings disappeared, ordinary Americans were unknowingly left holding the inflated, over-leveraged bag. A CNBC anchor tried to downplay it. But one economist put it bluntly: they're not selling stocks. They're selling America's future. The dominoes started falling by summer. Layoffs hit Silicon Valley as startups ran out of funding. Commercial real estate collapsed, with empty skyscrapers in San Francisco and Manhattan. Banks tightened credit so much that small businesses couldn't survive. Liam lost his contracting business. Rachel's school froze pay raises. Meanwhile, billionaire hedge fund managers celebrated record liquidity events. The contrast was haunting. The same people who'd cashed out early now waited on the sidelines, ready to buy everything back at pennies on the dollar. The 2026 crash wasn't just financial. It was moral, and the victims never even saw it coming. Then came the twist no one expected. In August 2026, a Senate hearing revealed that many of the $50 billion in billionaire sell-offs had been routed through foreign trusts in Dubai and the Cayman Islands. The same jurisdictions now being used to purchase U.S. farmland and infrastructure. In other words, the billionaires hadn't left America. They were buying it back through the back door. They weren't fleeing collapse. They were preparing to own the recovery. The market tanked another 20%, but quietly, private equity began snapping up foreclosed homes, bankrupt tech startups, and distressed municipal bonds. The great sell-off wasn't an escape. It was a reset, and they were the ones writing the new rules. By 2027, the dust settled. Millions had lost jobs, homes, and retirement savings. But the billionaires who sold early emerged wealthier than ever. History had repeated itself, again. In 2008, they called it the Great Recession. In 2026, they called it the Great Rotation. But to the people who lost everything, it was something simpler: betrayal. And as Liam rebuilt his business from scratch and Rachel started teaching night classes just to afford rent, one truth lingered. The system isn't broken. It's working exactly as designed. The $50 billion warning sign wasn't just about money. It was a signal, a whisper from the top 1% that the next chapter of financial history had already begun. When billionaires sell everything, it's not fear, it's strategy. They see what we can't. So what are they preparing for in 2026? A crash? A reset? Or something even bigger? Comment your thoughts below, and remember, when the rich start running, it's not panic, it's preparation.